Welcome to the Infinite Wealth Podcast. I'm Cameron Christiansen, along with our co-host Anthony Faso. And today we're continuing on the human characteristics, the human factors of infinite banking that Nelson has lined out for us. Anthony, what's a takeaway or two you had?
What I would say is that we're continuing down those human factors. We ended up breaking this into a couple pieces as we're going through the book. If you haven't listened to the first couple parts, continue to listen to this one, but we encourage you to kind of start chipping away at the beginning as we continue down the book of Becoming Your Own Banker.
If you're an investor or want to be an investor and you're looking to create passive income that exceeds your monthly expenses, then this is the podcast for you. Here on the Infinite Wealth Podcast, we combine the philosophies of Robert Kiyosaki's Rich Dad, Poor Dad, along with Nelson Nash's infinite banking concept. Anthony, summarize the golden rule for us.
The golden rule to me is the most fun rule that he has because I've used it with my kids, but it's he who has the gold makes the rules. Yeah. And one story he had shared is Panasonic wanted to build a plant to produce TVs. They had the money and capital in Japan, but they didn't have the production manufacturing. So they went to Mexico to do the manufacturing. Mexico had a law said that if you at the time that if you wanted to do business in Mexico, you could, but it had to be owned 51% by a Mexican. They didn't want to give up the control. So you know what? They built their plant somewhere else. The bottom line is Panasonic, they had the money, so they had the gold, so they were able to make the rules. And again, if I use this with my kids, if they kind of don't like something of what I'm doing with the money, I just remind them, do you remember the golden rule? And then at least I have a good time with it.
Yeah.
But I think that's good parenting advice as well, that to teach them both golden rules.
Yeah. Well done.
What would you like to add?
Man, I got a few things written down here. This kind of became my favorite section as I started to revisit it. I started writing down quite a bit. One of the first things that jumped out to me was on page 31 in the top right. There's a sentence in there and it says capital is responsibility and should be treated with great respect. I started to think about that statement and I thought about, I agree with that wholeheartedly, but oftentimes what you'll see is you'll see that capital has a very low barrier to entry. And a lot of times now access to capital is very easy, it's very low. And I started asking myself, well, why is that? Typically, right, it's because it is a trap. And I think that a lot of young individuals get trapped, right, by this ease of access to capital, whether it's through credit cards or whatever else. And again, it's shifting or defining the way they think about money. And so again, that falls on the responsibility of our parents, right? And before someone hits 18 and you've got all these companies out there vying for their attention and giving them free money, is you got to teach them how to manage it, is because the access to capital is a double-edged sword, right? It could be a huge benefit to somebody if they understand it, but man, it could also be a huge detriment to what they're trying to achieve and eventually lead them to financial failure. So that's the first thought I had. The other one was in here, right below it. He says, when you have a large amount of cash on hand, all sorts of good opportunities will appear. When you have, all right, when you have large amounts of cash, you will be surprised at the opportunities that will find you. I went and looked this up. This is a phenomenon, right? This is called the Bader-Meinhof phenomenon. It's a cognitive bias for certain opportunities that you become aware of. Most often, you'll see this if you haven't experienced it with cash or capital, you'll experience when you buy a new car. If you've ever went and bought a new car and you start driving home from the lot, all of a sudden you're going to see 50 of the same car that you just bought. You're like, where the heck was this? I didn't see any of these before. Right. And so that's an example of kind of that. I can give you another example of a client. We had a text exchange. I think I shared this on a previous podcast where they've been very successful. They're sitting on cash. The idea was, hey, let's take a break after this investment. And then bang, they started to see opportunities and they're like, man, I can't just sit around. There's too much to be done here. There's so
Hmm.
many
Hmm.
opportunities. I don't know which one to do. And a lot of times that is kind of a trademark with a lot of our clients, to be honest, is that, man, they don't have problems with deal flow. Typically the issue is, hey, how do I vet this opportunity that I want to do? And so again, guys, we're here available for you guys. If you guys have that problem, feel free to reach out. We're happy to help work through some of that with you. um, and then Anthony, even more,
Hmm.
even more, I gotta say, for the longest time I've always said that my favorite quote in this book was one. Do you remember what I've said?
If you know what's going on, you know. If you know what's happening, you know what to do.
Exactly. I've got a new one.
Hmm.
I've got a new one on page 31. I was reading this section on page 31. Right in the middle of this page, there's a short sentence and it says, "It is not a numbers game." Man, I loved that quote, and I don't think I've seen it before. And what he does afterwards is he just kind of follows it up with example after example. And this is where he transitions later in the book about kind of giving numbers. But he starts off with telling us, guys, this isn't a numbers game, right? This is all about kind of our mental mindset and our approach to personal finance. And if we can overcome that, we're going to be successful, but it's not easy. And in fact, that's what we're doing is we're going through these 5 human factors that we've got to overcome to be successful. And so that right there, page 31, is "It's not a numbers game," is in fact my new favorite quote from this book.
Hmm. Well, well done, Cameron.
Thanks.
I want to share one story where I had a client who was about to buy this investment property, and he was unemployed. He was self-employed, so that always makes getting the loans a little more complex. And the bank kept on asking for something, and then a couple of days later, they'd ask for something else and more, and it was like never ending.
Yeah.
And he was just frustrated in the whole thing. I said, you know what? You have the money in your policy. Why don't you just take a policy loan and pay for it in cash, and then you don't have to worry about it? And remember that I told him you have it's a golden rule. You want to use their gold, you got to follow their rules. But you have your own gold, so why don't you make your own rules? Another advantage of having access to liquidity and cash.
Dude, I got another one to share here before we move on.
Okay.
On page 32, Nelson's quoting a gentleman named Jackson Pemberton that wrote an article, and he's writing this article from uh, uh, as if he is one of the founding fathers. But the sentence that he
Mm.
shares in here is, "Let those feelings of jealousy well up within you and cause you to alert yourself to your true condition." So what he's talking about, or at least the way that I took it, is that again, kind of in that first one, is jealousy, procrastination is all a part of who we are. Right? You're going to come up against it. I guarantee it is probably on a daily basis. But I like the way that he said this and the way that he approaches this. He says, "Let those feelings of jealousy well up within you and cause you to alert yourself to your true condition." He doesn't say get pissed off. He doesn't say
Mm.
be mean to the other person. He doesn't say go badmouth them. What he says is take an introspective look at yourself and see why you're not in that position. And I think that is great advice for many people that are out there, right? If we see somebody that's in a position that we want to be in, man, it's up to nobody else but us to get us into that position. And so that's my kind of challenge to you guys here at this point, right? Is I would challenge you guys next time you guys are going through social media, you're watching a video and you see something and you feel that tinge of jealousy. I would challenge you to go down and write down 3 ways that you believe will get you, or 3 things that you can do to get you to where you want to be. Prioritize those 3 things and take action on the most important one. That'll be my challenge to you. He tells us how to do it right here. And so let's go do it. It's a challenge.
Well done, Cam.
Thanks,
Well
man.
done.
Thanks. I got more. Sorry. All right.
No,
Yeah.
keep it coming.
This so as I start to look at this one is also on page 31, he talks about kind of abdicating control, right? Giving over control of some of this stuff. And man, it made me think about a client. I'm going to share this story with you, but um, I wanted to do the in this page 31, 32 on the right hand side. He says they've abdicated the opportunity or responsibility as it pertains to the banking function in the economy. They're dependent on someone else to perform that job. Man, I had a great email from a client a couple of weeks ago, and the client had sent an email and he said, very short and very brief. He said, "Hey, can you send me illustrations for this?" One of them was, "Hey, if I liquidate this account and I do a big one and done into a policy, and what does that look like? If I max fund a policy on myself and I max fund a policy on my wife, what does that look like? And how many properties can I purchase in the next 5 years?" So what I would tell you is that client had a policy, but he's nowhere near kind of max funding all these things on the spectrum that he's kind of discussing. And so I did reach out to the guy, right, to find out kind of where he's at mentally, what's going on. And I asked him uh, why or what had got him so motivated uh, to take this type of action or to think this way. And he said that a friend sent him an email with just a video, and the video was referencing burning the boats. And he's like,
Mm.
"I watched that video and I realized that I'm not happy where I'm at." And he's like, "I got to take action to get me to where I want to go. And what I'm doing right now is not working." And so, whatever that guy sent him, right, it just lit a fire under him. And he's now wanting to go from probably 20, 25 miles an hour to 100 miles an hour to try to go get to where he wants to go. And so I thought that was a great point. He came to the realization that when you've got your money in TSPs or any sort of government qualified account, is you don't have any control over that. And so the action that he's taken is he's taken back control over his financing and then also the control over his money. So I wanted to commend him and share that with you guys.
Do you know the backstory behind that was in the video of burning the ships?
No, that's all he said. He said it was,
Okay,
yeah, it was, yeah.
I gotcha.
Wow.
Uh,
Go ahead.
well, no, I was going to give you the opportunity to explain it, but because it's somebody had talked to me and they referred it to burning the ships, and what they had said, and I don't know if this is true because I've heard different aspects that when some of the Europeans came over the to the Americas, they would literally burn their ships so they couldn't take them back, which means their back was against the wall, that they were going to have to go into battle and they were going to have to win and take ships. And it was kind of meaning you burn the ships, meaning you're all in, man. There's no way going back. It's a great little story. Um,
Great. Awesome. All right. I don't have any more on that one. What about you,
okay.
Anthony?
Nope, I'm good.
All right. Awesome. Let's move on. We're going to move on to the fourth human characteristic that we're going to be talking about is the arrival syndrome. And for me, I feel like this is kind of tailored for you. Anthony, would you like to share with our listeners about the arrival syndrome
I
and what
mean,
it is?
the rival syndrome is simply is I know everything, right? I'm not open to new ideas. And I will say that CPAs suffer from this tremendously for two reasons. For one, I think they do think that they do know everything, but also they don't want to be wrong. I mean, they're less apprehensive to do something that may be outside of the mainstream. And what I think is interesting, probably CPAs are probably one of the biggest obstacles we have, right? If someone says, "Oh, Cameron, this all sounds great. Let me just run it by my CPA." Probably not going to move forward.
Yeah.
And the reason being is because that CPA doesn't understand infinite banking. And so we need to be cautious when we're presenting some of our ideas to whether it's a CPA or maybe a friend or your family. We got to be a little cautious because if they have the arrival syndrome and they're open to new ideas or they're stuck in their ways, like you had mentioned, like with those teachers, I'm sure if he or she goes around and talks to the other teachers in the lunchroom, I mean, they're all going to be all about the TSA and the 403Bs, but they're not going to be open to his idea. And what I find is interesting, CPAs, they're not investment advisors. They're tax experts, or hopefully they are, but they're not experts in real estate or life insurance or starting your own business. So we should be a little apprehensive of getting relying too much on their opinion.
Yeah. What I would add there is that I've beat up on CPAs over the years, and you specifically, just because it's
Hmm.
fun.
Yeah.
But what I would say is I think that a lot of people take the advice because they trust them, right? They go to them, and the CPAs are well versed in the rules of the conventional game, right?
Hmm.
They know everything. And so oftentimes people are going and asking them, say, hey, can I do this? Can I do that? Where we're different is we're not playing that game, right? Is we're trying to remove all barriers and say, just give me my money. I want to go do whatever I want with it. I think that's one of the biggest differences is a lot of times is, hey, well, these are the rules that I'm aware of. I don't know what game you're playing. So that would be the difference that I would highlight. Awesome. I got more. What else
All
you
right.
got?
No, I had a quote here by Danilo Borstein, and he said the greatest obstacle to discovering the shape of the earth, the contents in the oceans, was not the ignorance, it was the illusion of knowledge. And very different because oftentimes we don't know what we don't know.
Mm-hmm.
And that's an issue with the arrival syndrome.
It is.
What else did you want to share, Cam?
The arrival syndrome was great. This is actually right at the end of this is he introduces us to this idea of EVA. I had kind of two big takeaways here. One, the arrival syndrome, I've always referred or referenced if you understand what's really happening, you know what to do,
Hmm.
taken from this book, but I realized it actually comes from this article.
You didn't know that?
You're a moron.
I just noticed it just now.
Say with me. I've always referenced page 65 of this book as kind of, hey, this is where I got this information from. But man, he referenced it there, and I'm like, wait a second. So it came from the article. So I jumped back in the article. I went back through the economic value added article, and man, there's some really good stuff in there. I think I'll save it for the next section on the use it or lose it. Um, but that was one takeaway I had. The other takeaway I had here was really in this prayer on the right side of the page. There's a prayer by Sir Francis Drake before he set out to be the first man to circumnavigate the world in 1577. I went and looked him up. And what was interesting was right away, it says that he was the second man to
Mhm.
circumnavigate the world. Ferdinand Magellan did it in 1522. But what I liked, so I thought I'd give Magellan some credit
Mhm.
there for being the first. And then, what I liked, what I want to share with you guys was this: is during the prayer, he says, "Disturb us, O Lord, to dare more boldly to venture on wider seas, where storms will show your mastery. Where losing sight of land, we shall find the stars."
Mm.
Man, such a good little ending to that sentence right there. We're losing the sight of man, we shall find the stars. Is man, you've got to leave the old stuff behind to go explore or to find the new stuff that's out there. I really appreciated that. And man, we went on vacation just recently. The thought that I had was, right, Anthony, think about staying on the beach at night and looking out at the sea and how dark it is out there.
Mhm.
I could not imagine thinking that I'm going to get on a ship and sail off into that darkness with no idea what's out there.
Yeah, unknown. I
That
mean,
would
no GPS.
scare the living
Yeah.
hell out of me, right? I would
Yeah.
be like,
Yeah.
this is a terrible idea. But yet he's praying, right, for this. He's saying, hey, where the losing sight of land, we shall find the stars. And so that would be something that I would wanted to share with you guys is you got to take that step. It's going to be scary. The first one is always the worst, right? The second and the third one get a little less scary.
Well done, Cam.
Thanks, man. All right, moving on. Number 5, use it or lose it, Anthony. Use it or lose it. The way that Nelson is portraying this in the book is he's already listed off. What I find wild is he already listed off 4 of the 5 human characteristics that we've got to overcome to be successful. And then what he says is in here, he says that even if we do overcome those 4, if we're not successful with this 5th one, we're still going to be a failure. We're still going to lose. And so for me, use it or lose it was putting money into action, right? Is you've got to get money moving. And then additionally is you've got to assign a value to those dollars. And so that's where the economic value added idea comes in. I'll throw it to you and then I'll kind of share some of the other takeaways that I had.
To me, one of the big takeaways of this section was there is a cost of capital. And Cameron has alluded to this article for EVA, economic value added. And in summary, what the philosophy is that when you're evaluating uh, an expenditure or you're going to buy an asset, oftentimes if we're going to use financing, we account for the cost of their money in the analysis. But when we use our cash, oftentimes we don't count for the cost of the use of our own capital. And a lot of times people think, well, there is no cost because I can just take it and withdraw it. But we have to realize there's what's called the lost opportunity cost, meaning if you spend this money to do A, that means you can't do B, C, or D. So when we're evaluating A, we need to incorporate that lost opportunity cost. And I think that's one of the many great things that infinite banking does is when we are, say, we're buying an asset, we're we're using this concept because we're taking into account the cost of capital, aka the interest on the policy loan. But what the article goes into detail to show is that when they analyzed Coca-Cola, when they started to use this concept and apply a cost to their capital, they started making better financial decisions because they're taking into the not only the tangible but also the intangible costs of deploying that money.
Well said. Not to repeat what you said there, but right, economic value add in the simplest terms is capital has a cost,
Mm-hmm.
and what they refer to in the article is that this idea is shared, kind of in MBA, right, classes, and it kind of makes its way around over the years, and it kind of fades away, and then it comes back. Same thing with infinite banking, right? This is why we're going back into the
Mm-hmm.
basics, is because this idea kind of fades away and comes back. But if you read the article, and this would be another challenge I have for you listeners out there, if you're a business owner and you have not taken the time to read one Nelson's book, we're reading it to you, but I'm not going to take the time to read the article to you. We'll put it in the show notes. Go read this article. It is absolutely fascinating. There's some very good business practices that are shared in that article that could be absolutely game changing for a small business owner. One of the things that is said in there that I thought, again, isn't super groundbreaking, but it does make you think. It says, good is no longer positive operating earnings. It's only when you beat the cost of capital. And then they go in there and they give examples of ways in which they have not been beating the cost of capital. And then they give opportunities to do that. So really good section, really good examples that are shared in this book. The way that I would compare that to infinite banking is oftentimes clients will call in and they'll say, hey, I've got this opportunity, and this opportunity is going to earn 6, 7, maybe 8%.
Mm-hmm.
And we start to talk through it and we talk about what we're earning in the policy,
Mm-hmm.
typically around 4, right? Tax free. So typically, if we're looking at taxable accounts or investments, is it's going to be in the range of maybe 6, right? Ish, maybe a little bit more.
Mm-hmm.
And that's without doing anything.
No risk yeah.
No risk, no nothing. So does it make sense for us to go and take a policy loan at 5 to 6% to go make 6, 7, 8%? Most of the time, it's not going to, unless there's some other opportunities or appreciation, stuff like
Yeah.
that we're not aware of. So that for me is a great understanding. And again, he also likens this idea to brushing your teeth, as kind of weirdly as it sounds. But again, it's this idea of constantly revisiting these ideas. It's not something you could read once and then put away and revisit a couple years. That's why we're going back through this book, is because it got to be in there, if not daily, monthly, right? And so that would be another commitment that I'd ask you guys, is to get in this book,
Mm-hmm.
make sure you read it maybe once a month just to stay fresh, because you got to stay immersed in some of this stuff. The last thing I'll share here is some of the notes that I wrote in my book. It says on page 35 on the right hand side, it says a fatal error is thinking that this is a matter a fatal error is thinking that the matter is a function of interest rates.
Mm.
If you are relying on interest rates produced by an outside agency, by definition, you're using compound interest, which always involves loss of capital. Again, what that means is if you've got your money sitting with somebody else, is they're telling you the best thing that you can do with it is leave it there. And that's not the case. You guys need to stick around because as we move forward through this book, we're going to give you examples and highlight examples of turning your money, right? Moving those dollars. And that's where you're really going to achieve financial freedom. And so we look forward to having you guys stick around.
And the next section we're going to have is going to be when Nelson talks about creating an entity
Mm-hmm.
for your own banking system. And he's going to share his views on universal and variable life insurance. So make sure that you check out that episode as well. Go make it a fantastic day.
Take care.
If you like this video, I know you'll like this one. And if you want to learn how investors use infinite banking to increase their returns and lower their taxes, check this out. And if you have some questions and want to see if infinite banking is for you, hop on a discovery call with us. Link for that will be in the description.